Good morning,
Good
everybody.
Monday morning.
Welcome to Monday.
Morning.
Good
Good morning, best
morning.
of us investors.
Good morning, Manuel. Good
Morning.
Chicago. What was that
Okay.
WKRP since it was Cincinnati? There it is.
Cincinnati, yeah.
Cincinnati.
It's time for more
Yes.
news and less Nessman.
The turkey drop.
Oh, yeah.
Turkeys don't
As
fly.
God is my witness, I did not know turkeys. But actually, they do fly.
Well,
Wild
isn't that
turkeys
day?
fly.
Yeah, they go up in my trees and in my barn up in the rafters. Yeah, they do fly.
Yeah.
Yep. So, well, I hope everyone had a good weekend. It was pretty nice weather here. Started to feel like fall here a little bit. We got in the 50s, and we actually might hit 32 tonight or tomorrow morning. It's our first freeze, so and I won't have to keep cutting grass and shit, so that'll be fine with me.
I heard you
I'm
guys got
leaving
a
early
big freeze
today.
coming next week.
Yeah, we're supposed to have 32 this week, so
Yeah, the whole center of the country is going to be freezing.
well, I don't want to freeze yet. Jeez, I don't want to freeze ever, Manuel. Never.
Get ready.
Yeah.
No copping out early now for beers.
Yeah, well, no, I can still do that. I'll just have to stay in my heated garage, in my barn. I was I was telling Trent that today a whole crew's coming. They're tearing my entire roof off my barn and putting a new one on. Should take
Oh God.
2 to 3 days. It's from the hail from back in April. They're finally getting around to it. So I have crews of people here now. I just hate people over. I just feel like I can't do anything. Anyway, what we
Yeah.
can do is look at stocks. We can look at charts and we can look at all the fun stuff. Um, it was kind of a quiet weekend other than Amazon having an outage. I don't know if anyone had outages where you were. It looked like it hit the East Coast more than anything else, but they're coming back up on their internet. Uh, got the Dow's up, a few S&P futures up, Nasdaq up with just a little bit. We closed up 238 points on Friday in the Dow and 117 in the Nasdaq and about 35 in the S&P. We still have escalating trade tensions, not only with China, but I think with Colombia and a few other countries. Um, Continuing day 20 of the shutdown. Um, hasn't really affected me. If it's affected some of you out there, and hopefully it'll get resolved. My two guys that I know, I saw them over the weekend from that work at the FAA. They're getting recalled Monday for some reason, maybe to keep planes in the sky or something. But they told me they're getting recalled. This week is a lot
Actually,
of what's that?
my daughter informed me her husband got his second pay cut from the military because of
Ouch.
this. Yeah, she's like, yeah, this is getting concerning. I'm like, yeah. He's like, there's a lot of talk of concern.
Are they
Luckily, I
gonna
hear.
make that money up?
Luckily, I
What's
hear.
that?
You said pay cut. So are they gonna retroact that money back?
Supposedly, but he still has to pay his utility bill and his rent.
Well, I can tell you some uh companies that are involved with government are not paying their bills. I think I told you a week ago that started. They're
Yeah,
not getting any cash flow.
yeah. I guess what my concern is, it's sorry not to get off course here, but is this our military? I mean, these are the people who protect us,
Yeah.
right?
Yeah.
Hey, what happens if they go on the picket line? I don't think they do that, but anyhow.
Yeah.
Anyways, a little screwed up.
Well, luckily, Trent's son-in-law has a rich uncle or a father-in-law who can spot him some cash.
There you go.
Because he just came off a very
I think that's
successful trip to Texas.
yes, yes.
Okay,
But these
earnings
things
this
have been
week.
going on for years. The military's aware of it. I've got friends that serve. They're just like, okay, just different day, different years, same old, same old.
I
Yeah,
worked in
no,
defense contracting and missiles and rockets, and when they'd have these shutdowns, we just kept working, and kept shipping and the payments came, they might have been a little later, but luckily I work
Yeah.
for companies. So, earnings this week, big earnings week, Tesla, Coca-Cola, Netflix, GEV, Intel, IBM, Lockheed Martin, Northrop Grumman, General Motors, General Electric, Procter and Gamble. Then we have some financials. We have COF and Zeihan and WAL, the two that caused a little spill a couple weeks ago. And they're going to be looking again on focus on the loan quality again, and on some of these banks that come out. So we'll see what happens. Tricolor, is still out there with the subprime mortgages on mortgage loans on cars. You've got the First Brands, the went bankrupt also with all the car parts, and we'll see how that spins through the rest of the economy if it does. We'll take a look at go here. Get rid of this. It is Monday. I'm a little slow, so bear with me. I did get my got my internet back going up again, so that was good. It was really slow on Friday. Okay, let's see what I got here. Let's try this one. So it's Monday. Again, I go and on Sunday put in charts of interest right here. You click on this. We put up two lists, one for the stocks under the 200-day moving average, and we'll check with Trent a little later and see if we got more trading under the 200-day moving average. And I list them out, and we have three on here that rolled over from last week. So, and then charts. You see the charts here as of Sunday. And then here's our swing trade potential setup charts. I try not to overwhelm it. I pick out the ones I think are the best, and I trade those or not trade those or watch those during the week. So that, again, this is a watch list, not a trade list. You got to apply it to your own personal trading guidelines. If you don't have any, you can go look at mine up here in swing trading guidelines. You don't have to use them, but they're just guidelines. Okay. So anyway, that's where we are. We'll go take a look at our little cheat sheet here. Here. It comes up. Here we go. So last week, we had a pretty good week, and it's still in one. I mean, on a paper trade, if you would have been in for 100 shares of each of the ones we had in there, that'd be up about $3,800. You can see 4 ended up 15%. We got a good one there. Lamb got out of that at about 0.78. We're still in Bio-Rad right now. Okay, didn't trigger. Up 4.1%. Got out of Generac. Got a nice bump on that 10.9, and then Consolidated Ed. So I've added these on. These are the additional ones that I put on the list this week. This is just the price that it closed at last. I don't know why this is here. That it closed at last Friday. So we'll just see if we can get a better price, or we'll see how it runs up on that. So that's your swing trade. And then our under the 200, we have a lot of these in here. Under 200, we still have Coca-Cola up about 2%. That's still open. Sprouts up about 5%. Dr. Pepper up 6%. Added in 4 more here. Again, these are the prices that it closed at. And when it opens, we'll start seeing what happens. But again, even on, we met 2 of them that were on the list, got out with a little bit of a loss. And you're going to do that. You're not going to have wins all the time, but you got to use your trading plan and get out. This one got out at 2%. This one got out a little bit, 1.35%. But you limit your losses. You let your runners run. And that's how you make your money, and that's how you make the $968. Even though you lost a couple hundred here, you made more here. But you got to follow your trading plan. Try not to get too many. I mean, I don't like to open up more than 2 or 3 anyway. But I give you guys a bigger list, and you can pick. And we don't always get into all these either. I don't, and I'll let you know why, because it's the price action goes down, never comes back up. I don't buy them right at the beginning. I kind of wait. If you're going to buy today, kind of watch out on Mondays. You always have a lot of orders backed up at the market makers, and it makes it for a funky opening for about the first 30 minutes of trading. So just be aware. All right, let's go look at charts. I think I have up next. Yep. Here we go. The SPY, we haven't quite got back to our high, which was, right before we had tariff day of 100% tariffs on China. But since we've been kind of rolling up the 50 here, and we're still within parallel Bollinger Bands. We closed a little bit under the 9 and opened just a little bit above, but the oscillators are not back in positive territories yet on the SPY. We'll look at the Dow. Same thing. It comes up. There we go. Again, here's our highs back in this area, and then here's 100% tariff day. It's nice that it came back down to the 50, and we found support on that. But again, parallel Bollinger Bands and negative oscillators on the Dow. And then the Qs. Again, remember, these are run by basically the Qs and the S&P by 7 to 10 stocks with the large market caps. If they go down, the whole market goes down. Even though you have 490 other stocks on the S&P, these will really make it move because they control 40% of the market. Here's the Qs. 50% of the market is controlled by the top 7 market cap wise. Again, sideways parallel. We got resistance up here. We haven't got back to the highs yet. It'll open a little bit higher, but under resistance with the oscillators aren't there yet either. And that'll reflect what we see in the Mag 7s. Gold. Gold, interesting. We had resistance line come on. Intermediate resistance came up, hit it. Friday came back down. We're going to open just inside that Bollinger Band. We'll see if we can push up, get some news. But it's been a really good trade. It's debasement trade for gold and for silver. Oscillators are still kind of okay. But again, make sure you got some resistance above there. It just gives you some extra power of stopping your trade on the top. Silver, same thing. We had some resistance pop up here. And kind of a down day for gold and silver on Friday. Did come down. We bounced off support. We're going to open up right about where we closed inside. We'll see if we can keep these moving averages moving up. But again, we're rolling over a little on the Bollinger Band here on the upper one, right at resistance. We're seeing a little bit of downward turn, rolling over on the oscillator. So this is a good run. So it wouldn't be upsetting to see, a little bit of pullback and maybe sideways movement on the metals. Bitcoin, not for the faint of heart. Get it to come up. Here we go. Bitcoin should never, it trades 24/7, these cryptos. So you get a lot of interesting action on the weekends. Here was a Chinese day. This market was open. The regular equities wasn't. We gapped all the way down to 100, came back up. Then we started this downward path. And then we found some support at the 200. We spent a couple of days playing with the 200. It's popped back up, and now we're trading above the 9, which is turning back up. Starting to see some turn up on the oscillator. So right here we've got support again, 110. We see a lot of that in Bitcoin between like the 105s, 110, 110 to 115, 115 to 120. You spend time in there. We'll see if this can get above this 9 and start riding up a little bit, but at least the momentum has switched for the last 2 days of finding support at the 200. If we look at the IBIT, which is where you can trade it as an ETF, didn't quite get to the 200. When we started the turnaround, got to the bottom of the lower Bollinger Band. I expect this to start open up above this, but again, here you had your crossover, negative crossover, your MACD. We're going to wait for that to come back. This 9 is going to have to roll back down. You got resistance here. We're a long way from that, recovering and coming back. We'll see what happens. Ethereum, for you guys who like Ethereum. Same kind of thing, kind of came back. We popped back over the 9. That's where we are right now. It's between the 9 and the 20. This one's a little bit better. So, we're starting to see a rollover back up. We had a crossover stochastic. Usually means, but not always, we're going to get a rollover on the MACD. So maybe we'll see some Ethereum and money moving back into the crypto space after the big 100% tariff scare. That
Supposedly, sorry to interrupt, but XRP is supposedly potentially being granted their banking license today.
Wow.
Which is, and then Walmart is doing a deal where they are this is all on X this morning, but where they're going to be able to accept crypto or Bitcoin as payment. And it's part of the relationship the company they're going through. It's a newer company, but supposedly underlying its XRP is the infrastructure. So could be interesting.
Yeah, we're going to see that a lot more. That not only are we seeing the AI revolution, we're going to see the financial services revolution, like we're seeing with Walmart and these companies. Not only are they going to use things like Bitcoin, they're going to use stable coins and they're going to have their own tokens, and that's going to put pressure on Visa, MasterCard, and those kind of companies, because think of
Right.
all the fees that those companies pay these and that we pay. We pay some of it and the company pays some of it when we use our credit card. I don't know how many restaurants, but around here, all the restaurants are starting. If you don't pay cash, you're paying for that fee on top of your.
Yeah.
They're not paying it
That,
anymore. I don't know if you guys are having that, but we are
that
around.
that's been happening for a while in our area. Even we were driving from Texas to Louisiana last night, and Ginger even was like, "Man, Square hits her business hard because they take a fee for running credit cards through them." But it's
Yep.
like, what's the alternative? There
Well,
isn't.
you're going to be able to. I mean, you're going to be able to do stable coins and do your own basically. At
Yeah,
minimal fees. And that's
yeah.
the future of
Well,
the financial sector.
yeah. It's just that adoption period that has to get to critical mass where your average person is paying through that channel.
But if
So
Walmart's doing it, that's a pretty good adoption
it's a big move.
mover.
Yeah,
Yeah, definitely.
yeah,
Um, MicroStrategy is followed down under the 200. Now we're going to see it pop back up with Bitcoin cracking back up a little bit, and that's the way it is. It's leveraged. Let's look at NVIDIA. These I would expect are going to look sideways, just like we see the regular markets. We went up to the top. Here we are riding along resistance underneath the 9. Oscillators look flat to down. Look at Meta. Really not much going on in any of these. Right along resistance, right along the 9, right on support. Let's see what happens. See what we got here. I'm going to move this so it's above and tight so we can see where the sell orders are. No way up there. Okay, Microsoft. Same thing. This is why we're seeing the sideways again. Sideways on these guys. I'm going to spend much time. Google. Same thing. Right on sideways. Parallel Bollinger Bands. Or kind of watch the oscillators flattened out. Tesla. It's just boring. I mean, here's boom. Here's our downward turn. And here we go. Sideways, right along resistance. Parallel Bollinger Bands. And it's just the second verse, same as the first with these guys. Apple, and this is what Apple had a little bounce Friday and opened up above its 9. It's going to open up right around resistance, but again, same kind of look. We don't have our oscillators turned except for the stochastic is turned a little bit. Maybe that'll move the MACD. Amazon had a little glitch this morning, and Amazon's right down on support. So you think about this, this intermediate support level, we've hit it like 4 times and closed above it. Like to see this 9 come down and then get us back moving up. We'll see what happens with Apple or Amazon after the shutdown. I think what CrowdStrike or one of those shut down Delta a couple of years ago, and they had to pay out a lot, I think, on that one. So we'll see what happens with Amazon. I know that the Amazon has affected United and Delta, I think, as their other tickets. And then Palantir. Same thing. Just boring, but not all of it's boring. That's the major of the markets. We go over to our watch list. Here's our bio lab. So bio came up. We got in at this level, and then we're above the 9 still. And here's our cost basis. The 20 is going to cross it. Kind of going sideways. You could come back and put in, your stops right above the 9. You're still above your profit level. So you shouldn't lose money on this unless we have a total collapse in the market and it opens up down here. But that doesn't look to be the case. So I always go back and look where I want to put, a stop. And usually I go, and probably in this area right here. If it comes down, hits it, you're out. It keeps rolling up, you let them roll. But this one we're up, and that's from last week. A couple of the other ones that we're looking at this week. Lowe's and Home Depot, but Lowe's has a little bit better on the oscillators. Came down, hit, got under the 200. The 9 came down and rolled right over the 200. We're starting to see a turnaround. I want to see this MACD crossover. We're only, we're very close to doing that, but as a roll back up, we've got some resistance at the 20. We've hit it twice, and then some sell orders up at 250.10. Again, I try to get a better price on here. I want to see these start rolling up, but I go back. If I was going to get into something like this and try to get a better price lower, but there's Lowe's again, not a buy list. It's a watch list. Best Buy, for some reason has come back up above the 200. It was playing along it, like these ones that kind of play, get back up, down, and then it's rolling right up its upper Bollinger Band. Try to get in a better price if you're going to get in here. The oscillators look pretty good on Best Buy. Always check out and see if there's any earnings or dividends before you buy into this, because that'll affect the trading price. Logic has a lot of big candles. I usually don't like to trade these, but I put it on here because it did have a nice trend reversal and got the 9, the 20 rolling up. Got some pretty good swings on your oscillators. It's outside the Bollinger Band. If I was going to do this to get it back in, it has some room to run up to intermediate or where the sell orders are and resistance on HOLX, CRL. Charles River, it's did one of these sideways ones, and we see it sometimes, and it catches a bid, caught a bid on Friday. The oscillators looked like they were going to come back and get us out, but they didn't. So there's a little bit of room to run on Charles. 183.95. So $3 or $4 on the upside, and here's your downside risk back to the 9. Kind of flat on the oscillators, but weren't too many in the watch list that I could see. KNX seems like trucking caught a bid last week. This one 2 times retesting the 200 up by the Bollinger Band. You might be able to get a better cost basis. You can see it's wicked down twice, but it's got a long way to go up to resistance, but not so far to sell orders here at 48.68. But nice little trend reversal. Got above the the 9, got above the 20, got above the 50, played the 50 between the 50 and the 200. Rode the 9 up and then popped up. So we'll see what happens. Again, a trucking company. When we look at the end of the 200s, Sprouts, we're still in. It comes up. Here's our cost basis. The 9 has crossed our cost basis. We keep coming back and hitting support here. We're sideways. If you wanted to get out, you could come down and, you got a lot of space here to come back in and put in a stop below, but you shouldn't be losing money on this. The stochastic looks like it's going to cross negative. It hasn't yet. But we'll see if we can catch a bid today and roll it up. But put in a stop above where your cost base is in. Maybe right around the 9 or something. If it comes down, you catch a little profit. If it doesn't, bounces off this 20 again and rolls, you're going to make some more money off that. Always protect your earning, or always protect your gains when you're ahead like this. Coca-Cola caught a nice day on Friday. Gave us a nice run up. Sprouts, we were up about 5%. Coke, we're up about 2.1%. Got him back here. Here's the 9 rolling up. Here's that pattern we like. Comes down right along support, starts rolling back up. Now we're going to hit the 200, and we got some sell orders right above that. So, it's going to come back down, maybe hit support at the 50. You're outside the Bollinger Band, so I don't like to buy outside there. So it's a lot more likely maybe to come back inside. Again, you have big wicks to the upside. But again, I'd put in a stop somewhere and save your profits on this one. But you see a lot of the money's gone into the, the consumables by, for people, because you need products, to live. And that's what we're seeing. KDP, here's another one. This is Dr. Pepper. Now we got him back here. Nice run up right along the upper Bollinger. And I have resistance at the 50 and right there where the sell orders are. Again, I'd come back in. Here's your cost basis. Anything above that's profit. Anything below it is not profit for you. But the 9's crossing over, the 20's crossed over. You could come back and put in, stops, down here and see if we can catch a run. It may come back and tag it and get you out, and then it runs up, and that's just the way it goes. Or you put it a little lower, take a little bit less of a chance of a profit, and run this up, to the 50. But still in that one from last week, up about 6%. Some others that are in this, TAP. This is Coors, Molson Coors. running right up the upper Bollinger. Got a nice turn on the Bollinger. We were parallel for a second, for a couple days, second. Nice oscillators here. Just use your support and resistance. Use your trading plan if you want to get in. BFB, Brown Foreman, I believe this is. Came up, you're going to have, came up, hit the 50, then finally got up and stopped on the 50. You're outside of the Bollinger Band, so it might roll back in here. But it has a nice turnaround. I like the oscillators. Here's your support, basically down here at the 9 and the 20. So you got, here's your risk, and then here's your reward heading up this way. This line means nothing. I don't know why that's there. We'll get rid of it. There you go. Makes the chart look a little better. And IFF, this one's interesting. International Flavors and Fragrances. Again, the downward pattern, sideways, right along support, start the roll up. We got to get past this 50. Sometimes you just hit that 50. You can't get by it if you can. You got resistance, but again, you're outside the Bollinger. Has a nice pattern, a little bit of a roll here. So, be careful if you're going to roll into this one or try to get into this one. Try to hit. I go back and look at, where we might want to put in a buy, at this point or a little lower. See if you can catch it. If you don't catch it and it goes up, then you just move on to the next one. And then last one, this one of these stocks that, people need toothpaste. And this one we caught and had a nice close above the 9 on Friday, right at the 20. Still kind of parallel on the Bollingers, but I want those to roll up. But I like the oscillators are showing us some progress there. So those are the ones on the 200. We still have the regional banking issues. Okay, this is the regional banking ETF down below the 200. We're still outside, even though it made kind of a bounce back. Oscillators look bad. We're still outside of the Bollinger Band. That might move back in here. We might see some sideways, but came down, hit support, but we're still not doing well. We're going to see what happens with Zeihan and the others reporting today. Here's Zeihan. You can see that got hit. You can see the XLF, which is the big banks financial ETF, had the same fate, came back. Now we're back inside the Bollinger Band, but the oscillators look bad. So yeah, not much on these yet. And then I'm going to go to Bob's favorite one, Fastenal. And look at Fastenal. Earnings came out. Fastenal's holding on right here at that 200. And the 9 is racing down to save it if it can. If we can get that 9 to come down and we keep this as a support level, we might see Fastenal as a swing trade back up. It's not there yet. Oscillators aren't there. But something you watch in the future is one of those future ones you watch. See if that can come down. But I'm impressed that for 4 days it's maintained over that 200. And that is what I got, Trent. So I'm going to pass it over to you.
All right.
There we go.
This could be a fun-filled week for sure.
Are you Dr. Doom today or Dr. Happy today?
I'm what am I? Cautious but optimistic but neutral.
Okay, that's awesome because that tells me nothing.
Right, that's exactly what's happening. All right, so let's just look over the level of volatility in indexes, and then I'm going to hit upon some small cap or small mid cap crypto mining slash data center companies and where they're setting up. So this is SPY, S&P 500 ETF that is heavily traded, and it mimics the S&P 500 movement overall. And we have a resistance line around 675. So this is where market makers are positioning to hedge their books. Well, Friday was October option expiration, which means there's less options in market makers' inventory that they have to hedge, which allows the market to be more organically movement in the market. Okay, whereas when you get closer to expiration, you get more of a mechanical positioning to hedge out markets. And so right now, what we're seeing is 675 on the SPY is sort of the top end, the resistance level. And then the support level is right around 655 is the main place where they're buying puts on the low end, creating support, and then selling calls on the top end to create resistance. So they're hedging their overall exposure. where we are right now, from the perspective of the gamma flip line, this is where if the stock price is above this blue line here, you see less volatility. Whereas if you see the stock price close below that blue line there, you see a more volatility or increase in volatility. And what they do is once gamma goes negative or stock price goes below that blue line, they will buy or sell into the momentum. So if the SPY heads downward, they will sell into that, accelerating that. And we saw that a couple Fridays ago when that happened. Now, if volatility can be your friend, especially from a short trader, swing trader perspective, if volatility is negative or gamma is negative, you will see market makers buy into that stock price movement, accelerating the upward movement. So right now we're in a neutral position. We're right on the line. And I think earnings are going to be a big part of this. This liquidity is going to become a bigger part of the headline in this discussion going forward. So right now we're in more of a neutral position on SPY. DIA is the ETF for the Dow Jones Industrial Average. Similar situation in that sort of neutral gamma environment. It's actually a little negative as of close of Friday, but it looks to open at 663, which is just right on the line for gamma. So this can become a resistance level as well, or it can become a support level as well, this gamma flip line. So very neutral environment right there. Triple Qs, similar setup, even though the Qs is going to open up about $4 higher today, putting us closer to that 610 resistance level. Support level is at 590, and your gamma flip level is $601. Remember, the triple Qs is heavily Mag 7, all tech, within the top 100 holdings in the NASDAQ. And so, whatever happens with volatility and earnings, this can be heavily affected overall, and we could see some volatility pop here. But we look to open more in a new or positive gamma environment, which means volatility should be lower this today, but that can change at a moment's notice. One thing I've noticed is, and Mark's pointed out for a while now, is the large cap, in particular, large cap tech stocks have all started to sort of plateau. And when I look at IWM, which is the Russell 2000, I'm seeing more price action, more bigger candles, bigger volatility. We're trading above, right at that trade trend line. We are in a neutral gamma environment. Support on IWM is at 240, and resistance level is at the number one level of resistance is at 225. So we're starting to see more lower low versus lower low with a higher high. So there potentially could be more potential in small cap companies and mid cap companies going forward. And you often see this rotation from large cap to small cap, and we're already seeing that. If you look at the 12 portfolio in the number of companies below that intermediate trend line, which is the 62, that's this yellow line. We have 7 out of 12. Whereas if we look at the tell sheet 12, which is stock screened from Kerry's tell sheet portfolio based on my quant model, we're only seeing a handful, I think around 3, they're below the intermediate trend line, which is telling me more money is looking for value. It's exercised its value side of it for the last, 2.5, 3 years in the Mag 7 and large cap growth type companies. And now it's looking for other places to go because there isn't enough value in those large cap growth companies. So anticipate that you'll see a rotation from large cap growth to small cap growth. And so let's hit upon a couple other things. This is the percentages of stocks above the 20. the 50 and the 200 here. And so let's start with the 20. 20 is our leading indicator. So this is our short-term period. And since really probably August 28th, the 20 number of percentage of stocks above the 20 has declined quite a bit. So we're right now 36% of stock equities are above the 20. On the 50 side, about 42% are above the 50 line. And then most from a long-term perspective on this, 55% of stocks are above the 200. We call this the Tudor Jones two what Paul Tudor Jones 200. It's early. Tudor Jones 200 moving average. And so when we see majority of stocks below the 200, we know that's a problem. We can see that back here when it started back in February 21st. We saw that decline of number of stocks below the 200. And that think of it this way. This is the dynamite that ski patrol throws a piece of dynamite onto a mountain of freshly laid snow or fallen snow, and this creates the crack. This becomes really when the slab of snow starts to separate and start to move, and then this is your avalanche. If we see this kind of scenario where we see, like we did back in February, March, April, where majority of stocks are below the Tudor Jones 200 or percentage of stocks below the Tudor Jones 200, we got an avalanche happening. We're not there yet. We have 55% of stocks are above that. So we're pretty stable. Yet what we can see is we're seeing the crack has been lit and we're starting to see separation in the snowbanks or the mountain, this slab of snow on the mountain. And the 50 is starting to show where that momentum is starting to happen. Yet the 200, the underlying base of that snow slab isn't moving, isn't the majority of it isn't moving yet. But these two, the 20 and the 50 are that leading indicator. So we want to keep an eye on that. And we're seeing it oscillate between what's at 53, about 50, to say 50 and 62. So we're seeing this boom, 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 boom. It's when this thing becomes, the 20 and the 50 accelerate, and that's when you'll start to see the 200 percentage of stocks by the 200 fall. Volatility today, as I said, we're in a neutral gamma environment, so we're seeing volatility in the S&P 500 is suppressed. It's starting to decline. We had a big day on Friday where we entered the F bucket pre-market, but luckily we closed in the lower half of the chop bucket. So we should anticipate lower volatility, lower price swings in the indexes overall. And ultimately, we want to be down here in this investable bucket where it's low volatility. And for those intermediate to long-term investors, it just trickles higher. And the majority of stocks are above the percentage of stocks above the 200 is in the 60 range. That's a positive bullish market. So we should anticipate more volatility because we are in earnings seasons. A lot of question about credit quality of corporations, global situation as well. And we look at 3-month average, we're starting to see this cup being formed on the 3 months average of the VIX. And last week, we sort of busted through it. This trend line I have here, this white trend line, but we closed below it. So we're in this questionable environment right now, and that's something to consider. What's the last thing I want to show you? If you follow the bond market, which I highly suggest you do, you got the 2-year here in the left-hand corner. Below it is the 10-year. We're right at 4% on the 10-year, which if you're buying a home, your mortgage rate should be a little lower. I've seen mortgage rates drop, 30-year mortgage rates drop a bit, but we're still in this questionable area. You got the 30-year mortgage here. It is down as well. You can see this decline in the yield. And remember, bonds work like teeter-totters. You are the yield on one end, and your buddy's the bond value on the right end. And when you go up, bond values go down, and when you yields go down, bond values go up. So if you've been trading the treasury market, you have seen a decline in yields, which means your bond values have gone up. Now, something to consider is if you are a massive hedge fund, one of the trades you play or could play, depending on your prospectus, is you could buy 10-year, say 2-year, 10-year, 30-year more treasuries up here, leverage them up in a big way, and collect a big payday. And as the yields fall, those values of those bonds have go up. And that was played out during the housing prior to the great financial crisis. When it blew up, you saw a lot of institutions, they would buy treasury bonds. I believe Citadel was one of those, and it actually turned against them because they were buying corporates in high yields. So they would buy, a 10-year treasury, say it was paying back here, paying, 4.75%. They would leverage it up 10 to 50 to 1. And as the yields fell, the values went up. They collected a yield plus they collected capital appreciation. It was when it reversed, it caught them off guard and it crushed them. You see high yield debt. This is junk bonds. This is low quality probability of actually defaulting, and that's why they pay out higher yields. You can see those yields have fallen as well, and they're at 6.58. This is something just to keep an eye on as part of your process, part of your toolbox to manage risk. And right now, we're seeing more money flow into treasuries, high yield debt, which is odd because it's more riskier, and it's institutions chasing yield to pay out, like Harvard, pension funds and that kind of thing. So this is some just to keep an eye on. It tells me there's a risk-off environment happening. Let's hit upon one thing here. Hold on a second. I've got this Zoom thing in my way. Let's see here. Where is it? It's the doom death cycle. There we go. Okay, so this is S.F.Mahaney. This is one of those companies who has converted from Bitcoin mining to data center development. Yeah. And so we saw a big run up when I first started talking about it in August. It was in the $7 range. It got as high on Wednesday of last week, closed out at $21.03, and then proceeded to sell off on Thursday. Friday, it came down this trade trend line. It looks to open up roughly just under $1 higher where it closed. And so this could be a continuation move higher. This trade trend line has shown it's been historically strong and it's held there. So something to consider from a short-term standpoint. Hive is another crypto mining company. I don't think they've made this change, this rotation into data centers. Um, it broke down back on October 10th, started heading south. Had a big down day on Thursday, Friday, closed up just sitting right above that trade trend line and looks to open at $6.15, up from its $7.71 close. So this would be one I would just wait and test. A lot of volume, 37 million in volume last couple days. But something to consider. These are being heavily traded because of the whole data center move kind of thing. Wolf, another example, came down. They all sort of peaked last week and then came down, hit the trade trend line. Now they're holding up and look to move higher today. Looks to open up at 1445. Iran, very popular one we've talked about for almost a year now. Same scenario, came down last 3 days of the a week last week looks to open up at 62.73, continuing to follow this support of the trade trend above that intermediate trend line. That's my line in the sand, and of course the Tudor Jones 200 way above that. So this something to consider is how big of a difference between the trade and the Tudor Jones, how wide this is. And sometimes I look at that and I go, okay, when I see toppy markets, I look at that measurement between the two, and that becomes sort of okay, is this thing going to start breaking down? And one last thing, Soundhound, we haven't talked about it in quite a while. But right now seems to be following that trade trend line, came down last week on Friday, hit it, closed above it. You can see it's just bouncing off it and moving higher. It looks to open up in 1966. So overall, we're in this neutral environment. And I still am optimistic the S&P will hit 7,000 by year's end. But earnings season's gonna be a big determiner of that. I think the biggest determiner of that will be NVIDIA, comes out probably within the next month. I think it comes out with earnings. And I think depending on what their message is, that could be a big influence on how, if we get another acceleration in price movement higher going into the end of the year. So, all right, let's open it up to questions, charts, and all that.
I got
A
a
few
question for
charts.
Mark.
Oops. Go ahead.
Question for Mark.
Go ahead.
That earlier when you were going through the chart, not the swing trading chart that we should look at for future consideration, but the actual chart that says you went down, you say, oh, we got stopped out of that one and we're still in this one. The existing, I guess it's the live version of your swing trading portfolio.
Right.
Where is that? Where do I find it?
Oh, hold on.
So, Discord?
Are you talking about I think he's talking about our sheet. Let me see if I can find it here. Oops. We're almost coming. Here we go. That come up here. You're talking about this one, Zeke?
That looks like the one. Yes, I think.
Okay. So this is on the website, isn't it, Trent? And it's on your morning reports.
Okay, it
Yes.
just looked a little different when I went on the website, I guess, and maybe I don't know why I didn't see that,
Yeah,
but that's
so
good. That answers my question.
Okay.
yeah, it's on the
Thank you.
Yeah, no problem.
it's every morning I update that. It's a PDF on the right-hand side of the newsletter.
Yeah.
You can get
Okay.
Kerry's tell sheet, all that kind of thing as well.
Yeah, saw that too. Okay, good. All right, that's good. Thanks.
Thanks, Zeke. Good question. Okay, a few charts here. Oxy Petroleum, again, Berkshire Hathaway owns Oxy. They sold off their chemical division to Berkshire full. You see what happened. We've crossed back down and now we've hit support twice. Okay, so I like to wait, for this 9 to come down, see if this support holds, which we see a lot, and see if that 9 comes down and gets us to swing back up. So right now, depending on your trading plan, I wouldn't do anything because I see the MACD is not there, the stochastic's not there. We're only at 29 on momentum. We've come back down and we're inside the Bollinger Band along this support. It looks like we're going to have some time to wait for the 9 to come down for a few days. And then you go over to the XLE, which is the energy ETF. You can see the XLE has been, which Oxy is a part of, came down, hit support, and came back inside the Bollinger. Tried to get past the 200, couldn't, and then we hit support again on that. So again, we're not seeing that turnaround yet in the XLE as oil in general is not up right now. So I would wait on Oxy just a little bit. And this comes from Robert. And then OSCR, let's take a look at that. Oscar, Oscar's come down. I mean, had a bad Friday, obviously, came right back down to where resistance is, which is acting as support actually right now. But I look at here and I see the MACD down here is going negative, also the stochastic negative. And I see that we're at we've gone from 58 RSI all the way down to 48 in one day. So we'll see if it bounces off this level here. But right now, I would wait as on a trade for Oscar at this moment. And then we had Brad wanted to look at CRWV, CoreWeave. CoreWeave's kind of like done, kind of like that AI thing's kind of come up. Here's your level of resistance. We've got parallel Bollinger Bands here, and we're just playing right between the 9 and resistance. And so it's kind of sideways. You have some room if you get above the 9 to head up a little bit. We're at 136.87. You have some resistance at 148.75. So that's your reward. Where we are today, your risk is down to the 20. If it breaks to 20, back down to the lower Bollinger Band. So I always come down, check the oscillators, and the oscillators are showing more negative than they were a day or two ago. So they're starting to roll over too. So you might want to wait a little bit. If you're thinking about that, had a nice run up here. And then you can see it's kind of just moving sideways. You get this 9 from going up like this to going kind of like 45 degree and then going flat. And sometimes you see it usually it comes up to the resistance, but sometimes it can flatten out and head back down. So I'd be a little cautious on that one right now for trade. And AMPX. This one had a nice run up. It opened up way up here, right where the sell orders are, and then dropped down. This was Thursday, then continued its drop. And I look at the oscillators; they're telling me could be more pain ahead. But we did find a little bit of support right around the 20. We'll see if that holds, or if it drops down to its next level, which is the lower Bollinger Band at this point. So you see it come up, you hit resistance, tried to pass it, couldn't do it. You had one day that kind of went up. Now you're below the 9, below the 9 again, below the 20 on this particular one right here. And let's see. Okay, let's see what else. So what else we got here? Trent, what are your thoughts on buying leaps on some of Kerry's over 100% candidates?
Yeah, so my response was I like the idea. You can take less capital and still get the same amount of um, effect as if you bought the stock. I think it's a good idea. With options, you got to manage them, even with long-term options. So if you're buying an option that's 6 to 9 months out, you're going to have less volatility in it because of duration. But I think it's a good idea to every so often, depending on what's happening with the underlying stock, to manage those if it means to roll them forward. So if you buy April 2026 calls on XYZ company, as you get closer to December, you would consider rolling those out into, say, June or something of that sort. So that way you keep that 6 month duration always in movement instead of it having, going from 6 months to 4 months to 3 months, then to a month. And that's when within 60 days, you start to see more volatility in options. So I like the idea. I know there's somebody who subscribes to the bus who is actually doing this and is having great success. Just remember, they can go down really fast because of the leverage ratio of them. So even though their duration is far out, and maybe it's just your positioning as this is my long-term position. So if it's I don't know, a NVIDIA or something like that, you think NVIDIA 200 is very likely, or 225 is very likely in the next 6 to 12 months, it would be a great way to play it. Just remember, if it goes to 130, you're going to lose value pretty, it's going to accelerate. So that's why when I look at this, if you have your capital exposure to options, you can take much less capital exposure, yet get the same or greater effect using leap options as well. and preserve that. You see that with a lot of people do that where they'll take 15% of their money, 10 to 15% of their money, and put them in leap options and take the rest and put them in treasury bills or something like that. It just you get the same effect but less risk perspective. So I like it. That's a long-winded
Perfect.
answer.
Thanks. Perfect. Thanks for that answer.
I'm waking up.
I was thinking, I was watching the other day, you watch like halftime report or some of these reporters and they talk about, how the consumer is flush with cash. We got all this money sitting on the sidelines. We've got, uh, consumer is out spending and all that. And everything I look at report wise just kind of doesn't jive with that. So I wanted to look into that this weekend a little bit. And so what I found is, the official economic reporting when they're looking at that is the conglomerate of all households in the United States, which is about 135 million households in it. And so they look at that as a one category. Okay. And so it kind of creates a illusion that, that everything's good for everybody. And so I just wanted to break that down a little bit. And I found out that in reality, the top 10% of households, which is 13.5 million, control 68% of the nation's wealth, or $113 trillion. The bottom 50% of households in our country, or about 170 million people, own just 2.5% of the wealth, or only 4 trillion. So 19 of the US households, only 19, own a net worth of 2.6 trillion. And to that, that's like 110 million of the poorest Americans combined alone. 19 households own what 110 million Americans actually own as far as wealth. The top 10% of households collect the lion's share of income, and they represent 50% of all spending. So it gives me a better perspective that what we're seeing is really a skewed account of how the nation is doing as us individual households, depending on where you are. But if 10% or 50% of the spending, that's why you see the consumer is still spending. Okay. And then if you see basically, that there's money on the sideline, it's because that with inflation, the higher class people have more assets and more money sitting out there too. Because I look at, statistics like 65% to 70% of Americans live paycheck to paycheck. Well, if they live paycheck to paycheck and it's 65%, they certainly don't have cash on the sidelines, and then we look at deficits and we look at car repos. And so my conclusion out of that is really the skewness of just using the whole conglomerate of wealth when 50% of the wealth is owned by 10% of the country household wise. So again, you always have to look at what they say in the headlines and kind of dig deeper to see what really is happening. Because I know a lot of people that aren't doing very well, and if something trips up, it's going to trip them up bad. And I know a lot of them. So a lot of working class people.
This is one thing when I was in the financial advisory world, they would always preach, go after the baby boomer. They're the richest generation. It was constantly pounded. But when you take off the highest 5%, 10% of the baby boomers, they're not the richest group of people. I mean, average retirement accounts between, 150 and 300,000. I mean, over a 20-year period of time, a lot of people run out of money. And I think that's the problem with these averages is it's so skewed that, you've got 1% of the population who's multi-billionaires, 5% or less are multi-millionaires. They skew everybody else who's broke. And I think that's where you have to really dig down into these numbers and look at this and go, majority of Americans right now, like you have pointed out many times, are living paycheck to paycheck. They're buying everything on credit and the credit is running out. And that's when things break because you think about the great financial crisis, it wasn't the billionaires and high multimillionaires who went upside down. It was those who were lent money based on made up income numbers and leverage themselves up. I mean, The Big Short is a prime example of, that movie. If you haven't watched it, watch it. It gives you an idea who was buying homes and what their income level was. And yet when they quit paying, that's when everything started falling apart. And I think that's when we're looking at the environment today, we're a little more different than we were back then, but it's still the same thing. When you don't pay your bill, that is a trickle effect that goes down the line. Eventually, somebody who's holding the bag gets hit.
You're seeing that in the car industry with the tricolor, which you
Yeah,
pointed out very successfully about 45 days ago, I think, probably. Right.
yeah, yeah. And I
So
think the other one is the one that really concerns me is private equity and these off-balance sheet
explain
loans
what
that
that
these
is for someone who doesn't know what private equity is.
sure private equity is um these are sophisticated investors. Accredited investors typically are allowed to invest them, and what they do is they put money into these funds, and a private equity firm will go out, raise money for a fund, and then go deploy that money into, depending on what the objective of it is. If it's housing, subprime lending, if it's small companies. You've seen it recently, Joanne Fabrics, Forever 21. These private equity firms go out, they buy the company, they leverage them up, and then they reap the rewards of that, and then they mature the fund, and then they send the money back plus the profits. Well, the problem with them is when after the great financial crisis, sophisticated, smart private equity borrowed money, did this, had distributions, and have successfully done this. The problem is it's the tiers below that. So if you're looking at it from a credit rating standpoint, your AAA rated private equity funds have done it right. They've managed their risk, they've managed their risk exposure. Then you get into triple B, and these guys are late to the party, but they're able to access money, borrow money. And it's when you get into the triple C level, which is junk, triple B and below is junk. This is the last of that trend, that bell curve trend, that these guys are leveraging up on bad investments, bad companies, and now you're seeing to start to come to fruition with the bankruptcies of Joanne Fabrics, um, Forever 21, I believe,
Experience.
is one. Three retail surf brands, Billabong, Volcom, and Quicksilver. It's just happening. It's that lower tier, that lower tranche of bad credit, companies who came in late, private equity that came in late. And because it's I believe 13 to 15 trillion dollar industry, when these guys go, they have no risk. They just go. Those who invested money or borrowed money from lose their money. And that to me is the bigger, that is the new version of what risk that we need to pay attention to.
If you
Um,
remember in the 80s, they used to the private equity. Remember the movie Wall Street with Gordon Gekko?
yeah,
He was buying out Blue Sky Airlines. He didn't want to build it. He wanted to sell it off for the parts. And same with it was Richard Gere and Julia Roberts, that whatever that movie was.
yeah,
He was going to buy Lewis's
pretty
shipbuilding
quick.
company and tear it apart and then take the money away. So
Yeah,
that's kind of what it was too.
Carl Icahn was big in the '90s for doing that. He would go in, get majority ownership of a company, get a couple of seats on the board, and then start disrupting the companies. And he would strip them apart. He was ruthless, made billions from it. Unfortunately, probably hurt a lot of people who worked at those companies. So I think that's one of the environment from a credit risk standpoint. And it really starts with, you know, um, with the consumer. If you can't
Yeah,
pay your
Frank.
credit card bill, can't go to the store, It eventually trickles down, and because these guys have leveraged up, who knows how much to one, 1,000,000 to 1, whatever it is. Um, that's the big risk, in my opinion.
Yeah, Frank,
Um,
Captain Miz brought up Frank Lorenzo and Eastern Airlines. Linda says
uh,
they're buying out the HVAC industry right now too. I've heard that too. HVAC and little plumbers, they're starting to buy those guys up.
yeah,
You know,
I mean that's a good business.
yeah. Pretty soon they'll buy
I've
up
always,
Bob, or Bob's probably buying up little plumbers.
Hmm.
That's what he's doing.
Listen, I don't know. Did you guys listen to Jensen Wong this weekend on Ducey's new show?
Uh,
Something Nation, it's called. Um, he said that they're running plumbers and electricians around the clock in these data centers. And the trade is lacking and they need more to service these data centers. Even afterwards, they're signing contracts to service the data centers. So they're going to make a lot of money. Me,
yeah,
I'm not interested. I'm at the end of my voyage, so I don't need it. But anybody who wants to get in and make some real money, because no millennial wants to do this, or any Gen Z, if it doesn't have a keyboard, they're not interested.
yeah, that's a very good point. Yeah, and honestly, I when I had a client who was of mine who was a master plumber, had a crew of 10 people, and his main revenue source was the University of Alabama. And his worst year, this is going through the great financial crisis, his worst year was he made upper six figures.
Mm-hmm.
Uh, his average year take home was over seven, it was mid seven figures. And this is a guy who goes out and runs a crew and they do plumbing for universities, commercial buildings. They make money. And I mean, even on the
On the
low end, I had
commercial
one
side.
guy. Yeah, I had one guy who was a plumber for residential. He worked 30 hours a week and cleared 250,000 a year.
Mhm.
He was like, this is the easiest job in the world. I
Yeah,
was like,
they're
wow.
cleaning people's pipes.
That's right. And I think that's it's not glamorous, it's dirty. Uh, go to school. I mean, I told our kids when they were going to college, get a trade, get something that is going to be needed in the future. Understand how to do things, but most importantly, learn how to learn and adapt. And I think if more parents would encourage kids to go to a trade school and get an associates in business to understand just accounting or something of that sort, couple that with a master's in plumbing or HVAC or whatever, go work for somebody for 5 years and then eventually buy their business out from under them and you'll become a millionaire. I
Mm-hmm.
mean, it's not
that
that
sounds like
hard.
Ebenezer Scrooge.
A millionaire is not enough today.
Well, multi-million.
There you go.
Yeah.
It's got to be
Yeah.
multi now.
Sorry. Yeah, exactly. But the point is we I heard somebody this weekend over the last week. Oh yeah, my kid's going to school to get a business degree. I'm like, oh, why don't you just burn the money? I mean, no offense, but you could go and work in your 4 different divisions of your company, Bob, and work
Mm-hmm.
for a year, a quarter in accounting, HR,
Mm-hmm.
manufacturing, whatever division, and probably learn more than you would in a 4 year degree.
Well, now you can go to AI and learn about, how do I write a business plan? How do I do accounting? How do I do all this? I think colleges, universities, if they're going to compete with the community colleges that are out there doing this, they're going to have to offer programs like that, like HVAC, like electricians, like, and, in addition to, engineering and accounting, they're going to have to offer those to keep their enrollment up, because you go and get a degree, like you said, Trent, and I got a degree in accounting, and I go get an accounting job or even a lawyer job. Hell, AI is taking over my job. They just plug it in the computer and out comes a report.
Yeah.
So
But you have
what's
to,
my payback for my 4 years of $200,000 of college? You know,
yeah,
zero.
I have a son-in-law who graduated with a degree from a university and said, this thing's worthless. I got to go learn a skill. And he ended up going into the military, and he's in a division of the military that is is very important to our safety in this country. And he's learning a skill. And in 7 years, he'll get out and he'll walk out making 6, 7 figures. And we'll see. It's interesting. But I think more and more universities and more students. My brother-in-law is younger. His son is not going to go to college. He is going to go into the military, but he's like, why would I go spend money at a university not knowing if I'm going to get a job or not to pay it back to make, a return on my money. So I think you're seeing more and more kids do that
I was in my past life, I was a vice president of operations at a student loan guarantee company, the fourth largest in the country. And I was like, I mean, we had to manage these kids' loans that they would get out. And, once you go underwater on that loan, it never goes away. You can't get rid of it in bankruptcy. You can't do anything. It just would ruin your life. And I'm like, wow, I didn't know there's so much debt out there, but we managed, that debt, tried to bring them back into compliance, but that's not something you want to screw around with is student loan debt.
now. Yeah. And there's what, over 1 to 2 trillion. That is one of the biggest default rate acceleration categories right now, is because that I think it was at the first year or right after Biden administration went out. Um, that delay in student loan payment plans, it kicked back in, and these guys can't afford it,
Yeah.
So I did see something about Trump is easing up on the it was on CNBC, about forgiveness depending on income or something like that. I don't know the depth of it, but it was a headline there.
Forgiveness of what?
Student loans.
Oh, student loans.
Yeah.
I
Yeah.
I don't agree with that. Because
I
you
don't,
know,
I don't, bel-
I had to pay my daughter's student loan along with interest
yeah.
during when I lost everything. I had to pay that sucker, and the interest that I paid was hefty. Considering I didn't have any cash flow at that time, struggling to get
Mhm.
back on my feet, they don't give two shits.
No, they don't. They're
And my
ruthless.
point is, fuck that. Pay it.
Yeah. Well, my belief
Can you be
is
a little more
you
blunt,
made the
Bob?
decision
I
to
didn't quite
go.
understand what you really were saying.
You don't understand what I'm saying?
No, can you be a little more
Do
blunt?
I have to be a little more clearer for
No,
you?
no, I think you're good.
May I chime in? This is
Yeah,
Mike.
go ahead. Go
Yeah.
ahead.
Go ahead, please.
I was in a similar situation. I had to refinance my house and put my two boys' college loan into the mortgage. And the benefit was it was 2.8% as opposed to the 7% that the college loan wanted.
Mhm.
So I thought I got away with something, but I'm still paying for it.
Exactly. So what gives
It's
them
annoying.
right? And what gives them the free card? No.
Plus now your
No.
house is tied to it.
I get the house is tied scenario that he made that decision to do that, but putting that on the side, debt is still owed like anybody else. You need to pay it. There's no free ride.
I
And
think
because
that's
you
the
use,
unfortunate part
and on
is
top of that, because you used your loan money for lifestyle, that's part of that problem too.
That I agree with you, Bob, because when I was in school, I graduated college in 84, so 80 to 84. And that was, high inflation. My friends would go and I didn't do student loans. I worked 35 hours a week at a defense plant and paid for my school as
Hello,
I
me
got it.
too.
And then, yeah, but my friends would go out and I'm like, I'd be driving this old piece of crap truck that I bought from the state auction. And they're driving new cars. I'm like, hey, where'd you get that? Oh, a student loan payment came in. I'm like, holy shit. Aren't you supposed to be, how are you paying for your college? you
Right.
know?
And your books and
Yeah.
everything else, right? The books were the killer, right?
yeah.
Yeah.
Oh yeah. That was a ripoff.
I
Yeah,
never
big
bought those.
ripoff. Yeah.
I never
It
bought
would
those
be a
unless I would wait and see if they even used the books because a lot of those college professors just did lectures and that's all they did. So I wouldn't even buy them.
it would be a
Well, and
kicker
it's
if the parents paid for college and they took the loan anyway, so they have party money.
But
yeah.
that's the
That
wrong
was
kind of loan
keg
to take.
money.
I'd rather take out a home equity loan than take out a student loan for party money.
Yeah.
I mean, to
All
me,
right.
student loans are like blood, you know? That's the
Yep.
way I look at them.
Yep.
They just draw the blood
Yeah.
out of you. But,
Yep.
you know,
Yeah.
it's like you're kind of stuck if you need money for education. But today, you know, if someone came out with a better product, it probably kill these student loans.
Well, Bob, it comes down to why are you going to college? What are you going to get a
Well, what are
degree
you
in?
going to do? The most people that come out of
Right.
college, Trent, don't do what they went to college for.
Right. I am not.
Okay,
I,
so
I
you
never
know,
used it.
right,
I got the piece of paper, it got me on the bus.
you know,
That's about it.
why do we have to take all these courses that
Art
will
history.
have no meaning to what you're actually going for?
Exactly.
You know,
Right.
what to keep the college, you know,
That- well,
chugging
that's
along and earning, you know.
just
I mean,
remember
there needs to be a
there
total reset in education.
it's coming. I believe it's happening. I see it with the kids, the parents of the kids that I'm around, and you're seeing them. Why am I going to go to college and get a degree in this and pay the outrageous amount of money for it and not have anything I can do with it afterwards? I think you're starting to see more and more of that.
How
But
many
it's going to take a
kids
while.
how many kids get into college, and I'm going to be a business administration major. And then how many times do they change over that, their major over a certain amount of time? I mean, so they even
Sure.
get into it without really knowing what they're going to do or what they want to do,
Yeah.
and that's just more waste of money. Um,
Yeah. I think that universities are feeling threatened right now. I think it's starting to happen. So unfortunately, it's gonna hurt students. But I don't know. I mean, I'd rather, looking back at it, I should have gone to a trade school instead of, the way I did it. Now I ended up in a good place, but who knows? All right, wow, 10 till the hour. We're gonna wrap it up here. Um, I have some
good.
customer service stuff. If I haven't gotten to you on some of your questions and that kind of thing, I'm going to address that today while I'm in the car. I'm headed
Fire
back
that guy.
home. What's that? What'd you say?
I said, fire that guy. He's not doing his job.
Yeah. Okay. Well, yeah. Well,
You need AI.
that happens. We won't be having this show
I'm
call
not. I'm
anymore.
not saying anything, Bob, because I don't want the job.
Chat GPT.
Just busting your chops,
Yeah,
Trent.
I wish I
Busting
could
your chops.
integrate
I know the
that
easy
into
life you have.
Grant, can I run two things by you real quick?
Go for it.
Kerry's Holdings. Is there a particular place out on the website that can be found?
It's on the tell sheet. If you scroll over at the top of the scroll, it's his portfolio is there.
Okay,
That's where you could see it. I also post it in the newsletter each morning. It's a PDF. I copy it, create a
got
PDF
it.
on
I
it
haven't
as
looked at
well.
that this morning.
Yeah.
And the
So
second one, when will the website be updated to reflect the current state of Best of Us?
explain that.
It still has the old format when you go into the website. It's still got the gold, it's still got the platinum. There's no such thing as all
I
that.
deleted gold last week. Platinum
Okay.
is the only thing you should have access to. If you see something I missed, let me know, please.
Okay, we'll do.
Cool. All right, I gotta pack and run. Thank you all again for showing up on this Monday. We're gonna have a great week. It's gonna be exciting. Guys, make money, be safe, preserve your capital, and we will see you tomorrow, same time, same place.
Absolutely.
Thanks a
day.
lot, guys.
Yeah, guys.
Take
Thank you.
care.
Thanks to everyone out there.
Yeah.
Yep.
See you later.
Yeah.
Loud.
Bye.
Peace.
Yep.